good morning. You've tuned in to ET Now, and this is Basa now with me, Shal D'Souza. Along with me, I have Shrishti Sharma. A very good morning to you, Shrishti, as well. But let's take a look at what the markets are doing at this point in time. We've given up most of those gains. Rather, we in fact started the day in the negative territory, but we have slipped furthermore. Now trying to make some sort of a recovery. So 93-point cuts coming in of the Nifty as we speak. Broader markets holding on to the positive territory. You have Nifty Bank that's actually falling a tad bit more than the benchmark in the season trade today. Let's take a look at Bharti Hexacom listing of the day. Remember that Bharti Hexacom is the biggest IPO in a year for India, and it's listed at a premium of about 35%. And now I think it saw an uptick, and it was higher by about 40% or so. So good listing coming in for Bharti Hexacom. There you go, 41% uptick coming in for that particular counter. Let's take a look at other sort of individual stocks, what they're doing. If you look at the list of Nifty gainers, then you have GVs, TPC, Tata Motors, Bajaj Auto that are actually seeing good gains. But actually they're seeing measured gains. 1.6% is the maximum that a Nifty company right now is gaining. That is DV's Laboratories for you. While on the flip side, you have Sun Pharma, that's the top loser on the Nifty, or approximately 50% downtick for Sun Pharma. Titan, JSW Steel, HDFC Bank, Asian Paints are the other set of losers. Advanced decline ratio right now has tilted a tad bit favor of the declines. Talking about the sectoral indices, then the only one that I can see that is seeing some sort of a gain right now would be the energy sector that's posting some gains. You have auto sector also seeing mild shade of green right now. But on the flip side, it is the banks, FMCG, pharma, all of them taking it a bit easy. And let's not forget TCS. That's the stock that you need to watch out for, because it will be kickstarting, or rather officially be kickstarting the Q4 earnings season, especially for the IT sector. So that's the way how the markets are looking like at this point in time, Shrishti.
Okay, so but with this, viewers, let's move on. And don't forget that today is Friday, and today is the Buy Now Pathshala Day as well. So let's go across to Kunal Bothra to find out what are the learnings for today. Kunal, over to you.
Thank you so much for that. So today's topic which I have taken is breakout gaps. Now gaps are something which are essential part of any kind of a chart, and especially when it comes after a space of major correction or consolidation, we generally term this as a breakout kind of a chart for stocks and for different asset classes. So I've taken two examples over here. The first one is something which we've already seen in the last I think 6 months to 1 year. The kind of uptick the stock has shown on the longer term, medium term time scale charts, and that's Coal India. We've seen the stock going into a major consolidation. So this was a point where the stock for almost 1.5 odd year was going into a patch of major consolidation. This is on the weekly charts for Coal India, where the stock formed a top closer to 100, 250, 265, and the major support around the 220 levels for Coal India. But then came a point when the stock saw a gap on the weekly close basis, and this turned out to be a much more stronger breakout for the stock. This gap managed to lead to the stock breaking past about the previous high, as well as ending this major phase of consolidation. And this gap became major support for the stock on the medium term time scale chart. So even if traders probably had bought the stock post the gap up opening for the stock on the weekly basis, would probably just have to keep a stop loss below the gap, or maybe one candle below the major gap formation for the stock prices, and then ride the trend on the upside. The stock is now above the 400 levels comfortably. So that's how gaps generally, essentially, should be treated on the weekly time frame charts. There's one more chart which is again looking very attractive in terms of very similar kind of a breakout mode on the weekly time frame, and that's IDFC First Bank, a stock which had done exceptionally well. So if you can see the recent past over the last 1 year, this was a formation of a gap for the stock, where the stock managed to break out of a multi-week, multi-month consolidation and then moved up higher. This became a major support for the stock price. After a rise for the stock, then a correction from 100 to almost 72 levels. For the first time in the last, I think, 6 months or so, the stock has formed a gap on the medium-term time scale. So this could be a potential breakout move for IDFC First Bank. And we go back with the historical charts with so many of the other examples. This essentially forms a major base for stock prices and could be a very good risk reward to enter the stock from a medium-term play.
All right, so that is the newest edition of, or the latest edition coming in for the bnsn Pathshala, decoding breakaway gaps, coming in from Kunal. Thank you, Kunal. As always, on Fridays, you join us and you talk about new topic for all of us to watch out for. But Shrishti, one of the stocks today that is decline is definitely Sun Pharma, isn't it? It's among the top losers on the Nifty right now. Apart from that, you have a Goldman Sachs note that has come out on Syngene, Newland Labs, or for the matter of fact, Laurus Labs as well. And on back of that, counters are actually seeing some sort of a move. Look at Laurus Labs, because Laurus Lab, Goldman Sachs has initiated a coverage with a sell rating. So back to that, you can see Laurus Labs actually declining in trade 1% now, recovered a tad bit from the day's lowest point. At one point in time, it has seen a sharp downtake. Another stock to watch out for will be Entero, because that one also has seen a brokerage action today. In fact, you have the brokerage going ahead and initiate a coverage on this particular counter. That's Jefferies that initiated coverage on Entero Health, and 20% up, locked in the upper circle, about 20%. Another one, watch out for Credit Access Grameen, because Goldman Sachs has initiated coverage on that particular counter with a buy rating. So you have Credit Access Grameen also seeing a good up move of about 5% or so. So a lot of individuals, no doubt the markets are not doing anything much, Shrishti, right now, but these all companies are actually seeing moves on back of brokerage notes today.
Absolutely, Cheryl, and definitely markets are watching out for TCS fine print as well, because today TCS will be reporting its numbers, and taking cues from that, all these companies from the IT space will be in focus. But another segment that we wish to highlight is the industrial space, because that's also in focus on the back of Macquarie report. There's an initiation on counters like ABB, Siemens, as well as Cummins, BEL, L&T, as well as Carborundum Universal are also on their radar. And what Macquarie is saying is that it's a multi-year, multi-themes capex upcycle ahead, and several themes are at the mid and the early cycle, and stocks like ABB, Cummins are also reacting to this particular report. So, Cheryl, across the board, though index is a little bit under pressure for today, Nifty and Bank Nifty are declining, but a lot of stock-specific and sector-specific action today indeed.
Absolutely, and those are all the stocks that one should watch out for. But let's talk about the stocks that you have queries about. Let's start with the query segment. First, let me call on board our experts today. We have Kunal Bothra on the technicals, while on the fundamentals, we have Vivek Karwa joining us on the show. A very good morning to you, Kunal, as well as Vivek. And also, viewers, you know what to do. Write to us on the number flashing on your screen. Mention your name, the stock that you're looking to invest in, mention that name as well. And if you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Once again, good morning, Kunal, as well as Vivek. So let me kickstart with the queries then. And this is coming all the way from Indonesia. Venkatesh has written to us from Indonesia. And he has Varun Acrylics, 500 shares at a price of 64 rupees per share. And Crompton Consumer, 250 shares at a price of 300 rupees per share. Wants to know whether he can average for the long term, and his long term is just 2 years. Kunal, what's your take on both of these counters?
So Vardhaman Acrylics, not an interesting chart. I think the stock has already seen a correction recently. I think from around 80 levels towards 55, 57 where it's trading right now. So would not suggest an averaging out. In fact, the charts on the medium to longer term also over the last 2-3 years are a lot sideways. So I don't sense any major momentum coming by into the stock price. It could be something which is very, very interesting. I think the stock is showing signs of a double formation on the weekly as well as on the monthly charts. A major formation seems to be have happened for the stock at this 260, 270 base for Crompton. So I think keeping that as a potential stop loss or a support zone, I think you can consider buying the stock.
All right, that's the take on Crompton. But Kunal, once again coming to you, this query coming from Rajiv from Mumbai, and he wants a technical view on IEX. All these companies, at least IEX recently showing some momentum. Is this a good buy at current levels, and any short-term targets to look out for if it's a buy?
Well, definitely, yeah. I would believe so. I think it's a very good buy, even though the stock has been extremely volatile. And, we've seen what has happened to IEX over the last 2 years, 3 years, where there have been very sharp phases of downtrend. But I strongly believe that, somewhere over the next maybe few months, there could be a significant turnaround that could probably happen for IEX. And I think at 50, 53 odd levels it's trading right now, approximately, I think it could turn out to be a very good risk reward or a buy zone for traders who have a medium to long term time horizon. Also, I think I'm sure that you need to understand that the risk appetite over here should be on the high risk side, because of the way the stock tends to be a lot more susceptible to news flows and events. So your position sizing has to be tweaked accordingly. would believe from a longer term, medium to long term play, I think it's a good buy zone.
All right, this one is coming in from Thomas George from Kochi. He wants to know about GE T&D as well as Schneider Electric. He's saying that he got 500 shares each on the delisting of Arriva T&D in 2010. Now he wants to know whether he should continue to hold on to these counters or look to exit. What's your take coming on this particular entire strategy, Vivek?
Okay, good morning to everyone. See, first of all, Schneider, I remember we spoke in last show that my initial recommendation was at around 80 or 90 rupees, and the stock is at 800 levels today. This was in 2020 August. Now, I feel the stock should go till 1000. So, in particular, Schneider Electric, you should continue. When it comes to GT&D, see, very good company. The old name was Arriva. In fact, I was a big investor at that point of time. I do not hold it now. But what I feel is the company is again switch gear and all components of electricity related products. And this industry is going to continue doing well. Schneider and GT&D almost are similar companies. And the products are also almost similar. So going forward, India is going to become more digital, even in electric side. So that is going to benefit GT&D also. So short-term valuations look costly. Of course, there are reasons for that. But I feel if you are going to continue holding it, this also should do well. So both would be a hold from my side.
All right. Once again, coming to you, Vivek, this query is coming from Gautam and he's already holding 1,000 shares of Himadri Chemical from a price of 353 rupees. Currently at mild losses in this one, but since he's at loss, he wants to know, can he go ahead and book out the loss in this one and make an investment in UPL at current market price? What will be your view?
See, UPL overall looks good, but the stock is always, has in fact never rewarded shareholders. So avoid that one. But what I feel is Himadri and other specialty chemicals last 3 years, these stocks have underperformed. And the underperformance was because they had outperformed before that. So there's a cycle turnaround which is waiting to happen. Now, will it happen immediately or 3 months later or 3 years later? That I'm not sure, but that is overdue. So at these prices, I don't think the downside is much from here. You should continue holding it on. The company looks quite good. And as and when there is some kind of turnaround in the specialty chemical space, this stock also should continue doing well. So just hold it on. Don't book out losses.
All right. On that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll take your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's continue taking all of your stock related queries then. And this next one is coming in from Dr. Uday Singh, who's a senior citizen, writing to us from Hyderabad. And this one is for you specifically, Vivek. He's watching you pretty closely, and also he's a regular viewer of the show. A few days ago, you had spoken about Schneider Electric. A short while ago, we also spoke about it. Once again, he spoke about, he's written that you spoke about how the company has progressed and how it's been a multi-bagger for you. Now he wants to know, can you spot another multi-bagger for him so that he can also invest at the right time and make good money out of that?
Okay. See, all these things are in hindsight. Okay. What happens is you pick, say, maybe 5 or 7 top picks. Out of that, even if 2 becomes multi-bagger, you are quite happy. So you can never say that, yes, this particular stock is going to open. But what I feel today, in pharma space, I like a stock called Piramal Pharma. And it is at around 140 levels. I think that stock should go to 250 levels. And it could be, can call it as a multi-bagger, I'm not sure. But yeah, it should really give you good returns. As a disclosure, I hold a good quantity of this stock. So there is vested interest in it. But I think stock is doing quite good. The company is doing quite good. 250 should be the level. So this can be a recommendation.
Okay, that's the take on Pharma. We're moving on to the next query, and this one is for you, Kunal. This one is coming in on Dixon Technologies, and a viewer named Rao from Baroda is holding 30 shares and his average price is 3,500 rupees. Can he add more at current market price, and any targets to look out for as well?
Yeah, you can continue to hold on to the existing stocks you already have. I think it's done reasonably well from your buy price. Now at current levels, the stock seems to be coming back towards a breakout mode yet again. But I'm not sure whether I think buying the stock or adding to the quantity at current levels would make a better strategy. In case if you can try and take advantage of correction, in case if that happens for Dixon Tech, and assuming the stock comes back towards its 50-day moving average. So currently the 50 DMA poised at 6,900. Say over the next 3 to 4 weeks, even if there's a mild correction towards 7,300, 400 mark, and the 50-day moving average also rises to those levels, I think that could be a better zone to buy or average out your holdings on Dixon Tech.
All right. This next query that I have is coming in from a viewer, Balaji, who's writing to us from Madurai. For you, Kunal, he wants to know about Tex Infra. 500 shares at a price of 160 rupees per share. What to do to sell or hold? I'm not sure if you track this one.
I would recommend an exit on the stock. I think it's been an underperforming name, still showing signs of a downtrend, and I think it's also on the verge of now breaking back again below the 200-day moving average. So it already did that break in the mid of March. So I think Tex Infra is something which currently is at 89, 98 levels. I would expect the stock to possibly retest the previous lows of 90 and even break below the 200-day moving average, looking at the weakness set up with the chart so far.
All right, moving on to the next query, and this one is actually coming in from Bhagya. And Vivek, she wants to invest 2 lakh rupees right now for the long term, and she is looking to invest park this money for her kids. So any two mid-cap stocks that are on your radar, one would be Piramal Pharma, I guess, and any other counters that you would recommend for the long term?
Okay. See, if you really want to go for long term, my first sincere suggestion would be that you should look at mutual funds. Why? Because when you're investing for kids, you're going to invest it for next, maybe 10, 15, 20 years. And that portfolio keeps happening in mutual funds. That should be the best bet you should do. Still, if you really want to go for stocks as such, I think one of my favorite stocks, apart from Piramal, is Nesco, Nesco. So that is at around 840. I think that stock should really do well going forward. So that should be a 1500 stock going forward, maybe next 3 years. So you should look at Nesco, Piramal Pharma, and this is definitely not a small cap or mid cap, but a large cap that can move like a mid cap. It does HDFC Bank. Now I've been talking the stock since 1380, 1400 levels. Now it's above 1500. I think the stock should be at least 2000 within next 3 years. So that even if it is within say years, you're talking about around 20-21% CAGR, which is again phenomenal returns, which a mid cap should give. So go for this 3 stocks. You can split the money in between these 3 and go ahead.
Those are 3 bets that Vivek has highlighted: Piramal Pharma, Nesco, as well as HDFC Bank. Kunal, coming to you from Reshma Bhatia, this query is, wants to know what should she do with IRCTC as well as Sona BLW. She has profits in those counters, so she wants to know whether she should book out profits or expect some more good returns in the next 1 year.
I think you should hold on to the stocks. I think they're just ripe again for a fresh breakout for themselves. I looked at the charts for both of these names. Sona Comstar is something which I had recommended, I think a month and a half out back at 680-90 levels. The stock had, risen up to 720, came back towards 650 mark, and now again at that 700 mark. So it's literally not done much over the last 1 month. I would still believe that the stock looks ripe for a fresh breakout, given the way we the recent momentum. Even for IRCTC, the stock breaking past about the 1050 plus mark, which has been a major multi-year resistance for the stock price. So I think the best times to try and buy or hold these stocks if you've bought at lower levels. Both of these names, IRCTC as well as Sona Comstar.
All right, moving on. Coming to you, Vivek, this query is coming from Pradeep, and he has a couple of queries. Firstly is Radico Khaitan, where he's holding 20 shares from a price of 812 rupees, making good profits in this one. And he also has 20 shares of ABB India from a price of 4,270 rupees. He's sitting at good profits in both of these, but now he wants to know, can he continue holding both of these for the long term, or he book some profits out and make an investment in MTR Technologies at this point?
See, MTR Technology is a good bet. You can definitely invest in that. But if you look at valuations of both ABB and Radico Khaitan after this moment, I find stocks really stretched. The valuations are very, very stretched over here, and hence the upside could be limited. Even if the stock doesn't go down, you are not going to make big profits. That could be a possibility. Now, I can give you an alternate to Radico. I think the the large cap in this segment is United Spirits. I still like that stock. And a smaller stock is India Glycols. That looks quite undervalued in liquor space. Now, India Glycols is not a fresh liquor space company, but yes, they do business in that also. So India Glycols look good. United Spirits look good. And instead of ABB, yes, MTAR Tech would be a good bet.
All right, this next query is coming in from Ravi Prasad. He's holding Geo Financial 200 shares at 350 rupees per share and BEL 500 shares at a price of 225 rupees per share. He wants to know what's the short-term targets that you have for both of them?
So Geofinance, of course, the data is limited, but I would probably expect the stock to gradually move towards the 390 to 400 levels. Depends on what exactly you're meaning by short term. I would probably look at 3 months as a time horizon over here in this case. So I think 400 should be a substantial target for the stock over the near term. And I think in case if there is any kind of a correction or a sudden dip towards the 330, 340 mark, if it happens, that should be taken as a good buying opportunity. BL on the other hand, I think is going through a very strong kind of a trending breakout. We've seen the stock skidding past about 200 levels very recently after that sharp correction, and then from 200 the stock has already crossed levels of 225, 230 plus very, very recently. So the momentum was on its side. Probably short-term play, which means a time frame of 3 months approximately, you can look at a potential 8 to 9% further upside for the stock from current levels. So maybe 250 could be a target which you can keep an eye on for BEL.
All right, moving on. And Vivek, the next query is coming from Dasar from Vijayawada, and he says that he's a short-term investor and not trader, where he's looking to stay invested for the next 1 year. He has already invested in Dalmia Cements, but from a price of 2,200 rupees. So he's at a loss in this one. But since his time horizon is 1 year, so can he move out this one and make investment, switch to Ambuja Cement or any other cement play? What will be your advice?
Ambuja is better bet. Definitely, no doubts about it. And he should make a switch. So that's the straight answer. Ambuja looks much better than Dalmia.
Right, that's about the cement space. Let me take this one from B. Behera from Qatar. Got 26 shares in Bharti Hexacom IPO. Wants a medium to long-term investment. I think it was very quick, given the fact that the stock just listed today. One lucky persons to get allotted in the IPO. 40% up move in already in the last 1.5 hours or so. What's your take, Vivek, for the medium to long term, given the fact that this one comes from the Bharti group? It's a hold?
At this price, yes, it's a hold. Definitely don't enter afresh in it, because the valuations now are at par with other telecom companies with the peer group. The comforting level in this is that the debt levels are quite low, and that I feel is going to be an advantage going forward. So hold it on. Don't book profits as of now, but yeah, don't enter afresh also.
Not to enter afresh right now, but the next query that I have is for you, Kunal. This one is from Prathmesh from Mumbai, holding 30 shares of Godrej Properties from a price of 1,670 rupees. And given the run on the counter recently, would you advise to book out some profits out in the short term, or he can continue to hold on?
Well, I think you can continue to hold on. The stock is, yes, it's overbought on the short-term charts, but then I would probably expect that the kind of moves which generally are termed as breakout moves for stocks when they are going to a stronger phase of underperformance or a strong phase of underperformance. So I think in that aspect, this could probably be a good turnout, breakout candidate for the stock or turnaround candidate over the near term. It may correct it back towards 2500, 2550 zone. That's the best which you can expect in terms of the correction for the stock. But I think that will be further taken as a territory where you may look to add or average further if you are looking to do that. But hold is what I would recommend.
Right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. We come back, we'll continue taking all of your stock-related queries. Don't go anywhere.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock-related queries. And continuing the same, Vivek, coming for the next query. This one is from Venkat Rao from Visakhapatnam. He is a senior citizen and a long-term investor. Wants to purchase Zomato as well as Rainbow Hospitals for the next 1 year. At this price point, can he go ahead and make the purchase, or should he wait up for some dips and then initiate the investment?
Just 10 minutes back, I was talking to one analyst. I can send you the screenshot, and I was telling buy Zomato. So that's very clear. I think you can enter. But yeah, keep in mind that at least 2-year time horizon, you're going to make very good money out of Zomato. As a disclosure, yes, I have recommended to my clients. So some of them will be holding at around 180, 185 levels only they bought. So still it's a buy. Similar case with Rainbow when it comes to hospitals. On ET now, I have again spoken about Rainbow many times. That also looks quite good over next 2 years time horizon. So both should be a strong buy.
All right. This one is coming from Sheshama, who's writing to us from Chengalpattu and wants to know about Balkrishna Industries. 2,400 is the buy price, holding for the last 3 months. So Kunal, what should the view do? Hold on to it or look to exit? And I also saw that smirk on Vivek's face when I actually pronounced the name of the location. I know I may be pronouncing it incorrectly, but yes, sorry for that. But Kunal, Balkrishna Industries.
Yeah, so I'll stick to the query. So Balkrishna Industries is something which I think has gone through a very prolonged phase of consolidation. So we know what's happened to the rubber prices across the globe, and that's why many of the tire stocks were going through their own bit of correction or a sharp downtrend, and they've not been able to recover as much as compared to many of the other peers, or not peers exactly, but stocks which have done from the auto anch space in the last 2 weeks and months. But I would believe that it's a very good quality name. I think the stock has done exceptionally well over the last 8-10 years. I think it's almost like a 10x movement for the stock in the last 10 years. So I would probably expect that the stock can continue to move up higher. Quality name. So stocks may often take time to consolidate, but once that consolidation is over, you typically tend to see much more stronger multi-year bull markets which can creep into names again.
All right, moving on to the next query, and the next query is also for you, Kunal. This one is from Sridhar from Coimbatore. He's a positional trader, is what he's saying, and bought 370 shares of PNB from a price of 133 rupees. He also has Ratan India, more than 2,000 shares from a price of 88 rupees. Any price point where he can look to exit both of these names, and what will be your suggestion?
So Ratan India, I think you should continue to hold on. I'll start off with that. If you remember, I think this was the stock which I had mentioned in the Diwali week also, when the stock was, I think, at closer to 60 rupees or slightly lower than that, with a potential target of 90 plus. The stock had hit those 90 levels, but I think now at 70 mark, it looks attractive for back again a retest of the 90 levels, possibly in the next 2 to 1.5 odd years. So keep that stock in terms of your holdings. PNB is also something which looks attractive at current levels of 137. The PSU banking stocks are going through one of the best phases of the rallies for the last decade or so, where there has been a consistent bout of momentum time and again for these names. So that's indicative that this could be a major multi-year in the making for many of the PSU banking names. So I think that aspect I would suggest a hold.
All right, this one is coming from Ravi from Bangalore. This one is for you, Vivek. He's holding 50 shares of Dalmia Sugar, and he wants at the price of 410 rupees per share. He wants to know whether to stay put with this one or look to exit the counter.
I think sugar you should hold it on right now for short term. Now, once the election is over, I think there should be some positive news which comes in sugar industry. And as well, recently also there was a news that ethanol production is going to be on track, and the ethanol blending in petrol is continuing to the way it is going, and the targets are a bit higher. So overall, the sugar sector as such looks good. So Dalmia also will be a hold at this point of time. Small company, low valuations, and the prospects looks good.
All right, Kunal, the next query is on a metal counter, that is SAIL. Mahesh Chennai is holding 2,000 shares from a price of 137 rupees. At what price point should he go ahead and sell the stock?
I mean, you not sell SAIL at this point of time. In fact, you should tend to ride this for the stock, because after years of consolidation and then multiple retests towards the resistance, the stock has finally shown signs of a break. But I think what I also like about the charts for SAIL is the coherent move which you're seeing across metal stocks. So they are of course very high beta in terms of the beta nature for the stock price trends. And when these stocks, they generally tend to give breakouts, we've seen historically that those are multi-year breakouts which could shape up into these names. So it all depends on how much is your time frame, what's your risk appetite, what's your overall construction of your portfolio, etc. But I think if you ask me specifically for SAIL, I would suggest a hold, given the way the stock has recently moved and the sector as well as the commodity and the metal stocks rally which you've seen across the globe.
All right, this next one is coming in for you once again, Vivek. This one is coming from RK. He's saying he's a great admirer of you in particular, and also of buy now, sell now in as a whole. He wants to know about. He's saying advise. Will Mr. Vivek advise 3 out of 5 that he advised today? He wants to know. I'm not sure what is he saying actually here. Okay, I think he's just trying to kind of put everything into context. All the stocks that you've advised today. One is Nesco, Piramal Pharma, USL, MTA Tech, and Himadri. I think he's just trying to reconfirm are these stocks that you spoke about.
Spoke about Zomato and Rainbow.
Zomato and Rainbow as well as India Glycol, isn't it?
India, yes.
Yes. So there's a huge list of stock, and I think for the benefit of our viewers, those are all the top picks coming in from.
I got to be careful when I spoke about so many stocks.
So far, we've already in excess of about 15 queries, so I'm sure we've spoken about a lot of stock today. This one is coming in now. Let me take the next query. It's coming in from viewer Akshay. He wants a technical view on Ashok Leyland. He wants to know whether is it giving a breakout on falling trend line pattern on weekly chart, and also on IRCTC, is it giving a breakout on up and handle pattern on monthly chart? Someone is actually watching you very closely, Kunal, and I think it's taken inspiration from you.
Well, yeah, but I think Ashok Leyland gives a breakout every time, but the breakout doesn't yield any kind of a major return for the stock price. There is no major trend up for the stock price, so I'm not sure what kind of breakout you are trying to indicate. So it could be a breakout for Ashok Leyland, but I would probably not be extremely optimistic on the stock price, given the way the last 3 years, 5 years, 7 years of charts have behaved for the stock price. So there is the inherent beta nature, which is very, very low to moderate for Ashok Leyland. That's why I believe that maybe the breakouts are not yielding great returns for the stock on the upside. Let's hope for a change that changes for the stock price, but that's something to maybe watch out for. IRCTC is something which looks very interesting. I think we just recently spoke about this stock and how the stock is poised for a much stronger multi-year uptake. We've seen volumes, we've seen classical signs of price patterns coming to fruition for IRCTC. So be very bullish on the stock in the short term to medium term time scale.
All right, that's the take coming in on both of these counters, and on Ashok Leyland, I literally feel you, Kunal. Every time there's a hope, but the stock never does. Let's hope that it does well in the times ahead. But moving on, and once again coming to you, Kunal. This one is coming from Anu from Gurgaon, holding 400 shares of Engineers India at a price of 233 rupees in the short to medium term. Any targets to look out for?
Very bullish on the entire PSU space, and I think Engineers India also, I think, has done reasonably well. Yes, the stock has been a lot more volatile, or a bit more volatile in the recent past, and that's obvious because of the way many of these PSU stocks had performed. There could be a phase where the stock may actually correct, maybe say come back towards 200 levels. That's where I would believe an eventual base formation will probably shape up for Engineers India. So you should hold on to your existing quantity in case if there is any opportunity, say in the next 1 to 3 months, and the stock correction towards the 200 mark should be taken as a buying opportunity, averaging opportunity.
All right, this one is coming from Yuvraj. He's writing to us from Bangalore. He wants to know, he wants fundamental view on protein eGov as well as an ion exchange. Vivek, what's your take on both of the recently listed counters? They look good over the longer term?
See, protein eGov, I will not be able to comment because I was tracking it very, very closely. And the other one was Ion Exchange. Okay.
Yeah.
See, Ion Exchange, I think you should continue holding. You're already saying what water scarcity is across the country. And next 10 years, I think this company is going to do phenomenally well. Now, there are only two companies in this space, say sizable companies. One is Varun and Ion Exchange. So among these two companies, I will prefer Ion Exchange compared to Varun. So future looks good, and water is going to create a wealth for people.
Right. Moving on to the next query, Kunal, this one is from B. Sai Babu. He wants to invest in the chemical and the pharma space for the next 1 year. So, any of your top bets from the sector?
See, I think SRF is something which looks exceptional in terms of the charts. The stock is already, I think if I'm not wrong, has given a breakout, is already on the verge of a breakout of a major multi-year high. The chart patterns are very intriguing for SRF, forming a major bullish flag formation. Aarti is something which is also popping up on the radar. In fact, the volumes in the last 3 or 4 trading sessions has been exceptionally high for Aarti Industries, which could probably be an indication that there could be a much more bigger or new trend in the making for the stock. These are the two names which I'd recommend from the chemical space. And from the pharma sector, I think it's better you go with the traditional pharma stocks. I think the likes of Cipla, Lupin are looking attractive. Divi's Lab could be at the cusp of a turnaround, the way the stock recently moved in the last, I think, 2 to 3 months or so.
All right, the next one is coming in from Anil, who's writing to us from Dubai. He wants to know about HDFC Life. He's purchased about 2,500 shares at a price of around 637 rupees per share. Vivek, he wants to know what's your view on this particular counter. What should he do with HDFC Life right now? The stock is around 620. His buy price is 637.
You can convert it into HDFC Bank. That would be much safer, better, and faster return as well. Now, when it comes to life, I think the life insurance company as a sector in India is quite matured and quite penetrated right now. So the growth prospects future is going to be a bit slow compared to your general insurance. So if you want to go for insurance, general insurance is a better bet than life. But I feel HDFC Bank should be a better bet. So both are from the same group. I just make a switch.
All right. Moving on to the next query then. And Vivek, what's your advice on Adani Power? Anjali Chandigarh wants to know, is this a good price to enter and rather start accumulating Adani Power at this point?
I say longer term, yes, I think you should hold on Adani Power. I remember we were speaking about it at 200, 300 levels. Now it's at 600 odd. So valuation wise, it doesn't look costly. So that's the dilemma over here. So hold it on. I'm very bullish on power, but you got to hold it on for the next 3-5 years. Then you're going to make really good returns, because the upside from it could be very, very slow because the stock has run up fast.
All right, so that's another query answered for you. 26 so far, more to go. So we'll take a break right now, and when we come back, we'll continue taking your queries. Don't go anywhere, viewers. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And this one is coming in from Neelam Magima, who's writing to us from Chennai, and she is invested for a long term, but she's holding 100 shares of TTK Prestige as well as Global Spirits at 100 shares of that one as well. She's saying that both of them are in losses. She's suffering loss of about 20% on both of them, and she's been patiently holding them for the last 2 years, Kunal. She wants to know, stay put for some more time or just switch out?
Spirits is an interesting case, because I think that stock, I remember, I think when there was this huge rally for the liquor stocks, I think Global Spirits was one of the first few names which had moved up higher. I think Radico, Global Spirits and GM Breweries, if I'm not wrong, these are the three names which had outperformed, rest of the pack, and we're talking of the likes of United Spirits, UBL, etc. So I think that aspect, it's a strange case that, Global Spirits has gone through a sharp correction from 1600 to now 780, 790 where the stock is trading. I would believe that the stock could probably underperform. It's better to make a switch. Maybe one of the emerging names which is looking attractive, Som Distilleries. So I would probably suggest a switch from this stock towards Som Distilleries. And TTK Prestige also, on the other hand, I think has been showing signs of consistent amount of weakness over the last 2 years and more. So it doesn't make sense to hold these stocks. I think it's a good time where you can look to exit and make a switch.
All right, that's the take on all of these liquor companies. But one of the stocks that is showing good momentum today, Vivek, is Quest Corp, and Chandrasekhar is already holding the stocks, but he's at a 35% loss since his buy price. So is this a good point and price point to actually go ahead and buy more and average out holding? What will be your advice?
See, generally stocks which never perform always are laggard, and they when they suddenly move, you should be doing the reverse. You should be booking out profit because there is no much fundamental change as such in the company. So there are two reasons the company should move. One is just moving with the market. The other one is some fundamental change. So I don't find anything happening right now. So slowly and steadily as it goes up, I think you should in fact book profit. Don't buy afresh.
All right, Kunal, this one's come from Guru and he wants to know about Tata Elxsi. He's purchased at levels of 7,300 rupees per share. He wants to know whether he should stay put with this particular counter or what should he do, because he is making healthy set of profits on Tata Elxsi and the stock has not done much actually in the last 6 months.
Yeah, it's not done much. It's actually gone through a correction. There's been a phase of mild consolidation for Tata Elxsi in the last 6 months. So it's gone through those multiple phases. Now the concern for the stock is the bearish crossover for the stock, because the stock in the last I think 1 week, 7-8 days has shown signs of 50 DMA breaking below the 200 moving average. Now that could probably spell some bit of concern for the stock trend over the very immediate term. So if in case if it breaks below the 7,700 mark, I would suggest keep that as a immediate stop loss for the stock. I would probably expect that the stock may correct by a margin at least 8 to 10% further from those levels. So keep 7,700 as the immediate stop loss for Tata Elxsi and then continue to hold on.
All right, moving on, and Vivek, the next query is on BCL Industries. Bharaj wants to know, can he go ahead and buy BCL Industries at current market price? If not, then any other stock from the agro-food manufacturing sector that you like?
See, BCL, Global Spirits, and there are few other things I'm not able to recollect. All were moving because there was a news that grain-based ethanol would be a big thing. And somewhere that story has slowly died off. So I would recommend a avoid on BCL as well, because until this grain-based ethanol thing gets cleared, things look a bit dizzy over here. And the more problem with grain-based ethanol is there's a theory that when you use grain-based ethanol over here, the inflation in grains go up. So I don't know what is going to happen. So please stay away.
Right, let me kickstart with the rapid fire then. The first query coming from Vidya wants to know whether it's good to invest in NMDC Steel at current levels for the next 2 to 3 years. Vivek, if not NMDC Steel, which other?
Steel companies do well, so you can hold on NMDC.
All right, Vivek, Urshita from Mumbai wants to know, is this a good time to buy Reliance Power at this point? Any view?
I don't find any power in Reliance Power.
All right, Dilesh Joshi wants to buy Tata Chemicals for the long term. Now is the right price to buy Tata Chemicals?
Yeah, it's a very good time to buy the stock.
Okay, Kunal, Kabir Bedi has bought 1,500 shares of Heritage Food from a price of 240 rupees. Is this a good time to exit, or can he continue to hold on for the next 3 months?
Continue to hold on with a potential target of 350.
Kunal Kusuma from Pune wants to know about Varun Beverages. What's the outlook for the next 2 months and right price to buy?
I think it's a good time where you should look to avoid. I would suggest the stock could probably correct towards 1,250 mark.
Okay, Vivek Bhagwan wants to know, is this a good price point and can he go ahead and buy PNB Gills at current market price with a long-term investment horizon?
See, I'm not that big to advise Bhagwan, but to others, PNB Gills, I think you should avoid it.
All right, Kunal, Ramesh from Karnataka wants to know about Amber Enterprises. 32.50 is the buy price. What's the near-term target for Amber?
1,000 plus should be a near-term target.
All right, Vivek wants to have a mid to long-term view on Share India Securities. He's holding 70 shares from a price of 1,630 rupees. Any view?
At this price is avoid.
All right, this next query that I have is coming in from, actually I missed the query. Okay, this is coming in from a viewer Murli, and wants to know about Credit Access Grameen. At current price, makes sense to buy this one or look at 5 Fusion? Vivek?
You should hold on Credit Access.
Okay, Kunal, what's your short-term target on AIA Engineering? Shiva is holding 40 shares from a price of 200 rupees.
Not too much optimistic. I think you can probably keep 750 as a stop loss and hold on.
All right, and with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Vivek and Kunal, for joining us on the show and resolving all the viewer queries. And Kunal, thank you so much for the Pathshala. But with that, we come to the end of this week's edition of Buy Now, Sell Now as well. So it's goodbye from Shrishti, our producer Shriyansi, as well as Jilly, and our director Santosh, as well as myself. Thank you so much for watching. See you next week.
If you like this video, then like, share and subscribe to ET Now.